this last week, a lot of new information coming to the fore around China. For example, Didi, basically the Chinese regime deciding to initiate delisting a giant company, ostensibly from the U.S. exchanges. Now, that seems counterintuitive. Why would they be doing this?
The most important thing to Xi Jinping, the Chinese ruler, is control. He believes in a state-dominated economy. He doesn't believe that foreigners should have much of a role in China, if any, except, of course, to bring money and technology and then to leave. So the problem here is that they're making some pretty short-term decisions. Because you've got to remember the chronology, that Didi lists on a Wednesday, and then on 2 days later, the China Cyberspace Administration stops the download of the ride-hailing app that Didi is so famous for. I mean, it just shows you that they really are thieves. This is thievery, because they could have done this before the IPO. But also, I think it really shows basically that China doesn't really care about money as people think. What it really cares about is absolute control, not only over state enterprises, but also nominally private companies. So this is an indication of where Xi Jinping is taking China.
Well, and it's interesting you say thievery. It may be obvious to you and I what exactly happened, but there was an IPO. What is the significance of doing this 2 days later exactly? How does the money play out here?
Well, the significance is that the Didi stock price dropped significantly when it became clear that China was going after the company. I mean, it was not only taking down the app's downloads, it was also basically saying, look, we're going to investigate these companies. We're going to investigate Didi and we're going to investigate other ones. And got to remember what's at stake here. A lot of these Chinese companies listed on American exchanges with these variable interest entity structures. These are structures that clearly evade what are Chinese mandates. Companies like Alibaba have used these, and there's a lot of legal precedent in China itself that these VIE structures are not legal. But China has allowed companies to use them to list on foreign exchanges. Now, China would, in a sense, be in its rights to start confiscating the foreign ownership interests, the shares in these Chinese companies. And they actually did that in the 1990s with a company called Unicom. Unicom didn't have a variable interest entity structure. It had something very similar, a China foreign structure. And basically Beijing said, no, this is a clear evasion of Chinese law. We're not going to permit it. We're tossing out the foreign shareholders. And they could do that for Alibaba and many of these other companies that have gone public.
So what is Wall Street thinking right now? Because, of course, a lot of that investment that went into that company upon the IPO came from Wall Street.
Well, a lot of people are cheesed right now, as one Wall Street insider told me a little while ago, because people lost a lot of money. People just thought this would be another Chinese IPO, initial public offering, where everyone would make a lot of cash and everyone would go home happy. But in this particular case, those who bought into Didi Global, many of them suffered losses because of what China did. Now, whether this will trigger a rethink among Wall Street, who knows? I mean, God knows what those guys think. But the point is it should, and they should have never been in Chinese companies in the first place because they've seen this corporate raider mentality before on the part of the Chinese.
Well, to me, though, this whole situation, it just kind of highlights how much inherent risk is there in, frankly, any money that any of these Western companies are investing in China.
Just think about what happened to the Ant Group IPO. This was pulled 36 hours before they were going to start trading. This was last November. This is important because this was going to be the world's largest initial public offering. Something like $39.5 billion they were slated to raise. However, because Jack Ma made a speech in October in Shanghai at a high-profile financial forum that criticized regulators, they decided to stop this even after the money had been taken in from investors. This just shows you that these guys in Beijing, control is what's more important to them. The continuation of the Communist Party, not normal operation of the financial markets.
There's this idea that money that actually has been invested into China, it's very hard to get that money, actually get it back, even though on the balance sheets it's listed as billions, if not trillions of dollars. So can you explain that to me a little bit?
Well, China's renminbi is not convertible on the capital account, and people have known this, forever. So people obviously thought, well, they don't really mean it. But yeah, they do mean it. And this shows you a weakness of the Chinese financial system. Because since about the middle 1990s, Beijing has been promising to make the renminbi fully convertible. In other words, convertible not only on the current account, but also the capital account. Well, they missed their 2000 deadline. They had promised to make it fully convertible by 2000. Then they've missed another 2 deadlines after that. And, China can say all it wants about attacking the dollar as the world's reserve currency, but nobody is going to hold renminbi in any substantial amounts for any period until it becomes fully convertible and until Beijing has been able to convince the global financial community that they will administer their currency in a fair manner. That's the problem. China can do all it wants, but what we've seen so far is that global usage of the Chinese currency has gone down, not up. And it's actually in the low single digits right now.
What if a company decided it wanted to pull all its assets from China? What would that look like? Like, let's say, JP Morgan decides, wow, this is way too much of a risk for us.
Well, they can't do it on their own. They have to get approval from the Chinese authorities to do this because the currency is not convertible on the capital account. So they should know this. I guess what they're thinking is they're in for China for the long haul. They're not going to take their money out. They're going to reinvest proceeds. Who knows what they're thinking? But the point is, companies are trapped.
So, with this recent situation with Didi, I think you were alluding to this a bit earlier, but some people have been saying, okay, maybe this decoupling that's been discussed, that's been brandished about, is something that might actually begin happening in earnest.
It should happen in earnest. Should have happened a long time ago. I think part of it is because there's always this hope that China is going to produce profits. This is a hope on the part of the business community that goes back 200-300 years. And really what we have seen recently, though, is Xi Jinping moving the country in the wrong direction because he believes that it should be state-dominated. He's a communist. He tells us he's a communist. We just don't believe him. But of course we should believe him because he is serious about this, because we've seen what he's done, not only in the financial markets, but also elsewhere. For him, the Communist Party must be in absolute control of society, and that he must be in absolute control of the party. How many times do we have to hear him say it before we actually start to believe the guy?